Okay, so welcome to our first class on the ICT strategy, or SMC, depends on how you call it. Okay, so in this lesson we're going to talk about order blocks and in depth what are order blocks, how to spot them, yeah, and what makes them good or bad order blocks. Okay, and probabilities, we will also talk about probabilities in the course, so to make sure you know what I mean. Okay, so before we begin, shout out to ICT for giving us this beautiful strategy, and if you have not subscribed to his channel, make sure you go and check it out. And shout out to ARA, yeah, for showing me some very cool tricks on trading this strategy. Okay, so without further ado, let the intro play and let's jump in. So our first order block we are going to check out is the bearish order block, which is formed in a let's call it a bearish market. Okay, so it's the last bullish candle before the bearish impulse or the bearish move. Okay, so when you go to price, you'll see these types of order blocks, and it's always the green candle before the red one. Okay, so you'll understand what I mean now. This is what, when we talk about order blocks, this is what we mean. So we know that price moves on a high and lower low structure. Okay, so we are going to just name it as lower low and higher high, or a high and a low. So we'll just place it as a high and a low to remove confusion. And let me remove this. Okay, so we'll have a high here and our low there down. Okay, now our low is here. So we will see that the market always does the same thing, right? Forms a high and a low, a high and a low, a high and a low, because that's exactly how the market moves. Even when, if you're using any other strategy, the high and low rule does not change. Okay, so in the ICT strategy or the SMC strategy, we believe that price comes back here, not the way you do the breakout and retest thing or the breakout entries. We don't do that. In ICT, we wait for price to come back to our order block to take a trade, because now this is going to be more technical how I'm going to explain, but traders, ICT traders, believe that when price reaches this high, to form this high, the banks place a lot of money here. So let's say they have placed a 5 million lot. Let's say this is just an example. Okay, 5 million lot trade here. So when you sell here with a high amount like that, price comes down. Now the reason price comes down is because in order for banks to make money, the retail traders have to lose, right? So they go down looking for liquidity. In liquidity will be on our next topic, so I want you to explain. But liquidity is mainly, let's say for example, we are taking trades right here. Okay, so all the breakout traders will their stop loss will hit. All the traders who are waiting for double bottom will hit or sell. All the traders who are waiting for a retest and continuation will hit their stop loss. So banks push down price to take out the liquidity, to take out the retail traders and take their money, right? Now, when banks take out the traders, they start removing this position slowly, thus taking price up. So once price comes here and they have taken out all their trades that were here, they add a bigger one. So let's say they placed a 5 million trade here. Now they will place a 20 million. Okay, and since there are no retail traders down here, it's all making money, right? So when they place a 20 million trade here, it will push down, and just like that we win. Okay, yeah, so that's the technical part of the strategy. Okay, but we believe that price is going to come back to this last bullish candle before the bearish move. Now let's go on the chart and I'll explain what I mean live. Okay, on the charts you can see that what I mean with the last bearish move, last bullish move before the bearish impulse, right? Now you can see this is the order block, and price pushed down, came. There's a reason I've marked this one instead of this one, so I'll explain this as we continue with the strategy. So make sure you subscribe and don't miss out on the next topic as we go deeper. Okay, now there's a reason I've marked this one instead of this one and instead of this one, because this is the last bullish move before the impulse. Okay, and these are the breaks, break of market structure, BMS or BOS, or doesn't matter, it has many names, but it simply means break of structure, in which I'll explain in the next topic. So I want you to focus on how I'm marking these levels. Okay, as you can see, price came back here. If you are taking trades, you are selling right here. See, there's a small stop loss and take profit. You go for a 1 2 3 right here, boom, you win in 2 candles, right? As you can see, right, again it came here, it respected that level, and see, another win. Same thing happens every time. Right here, stop loss above that level, take profit 1 2 3 or 1 2 whatever. I choose 1 2 3 so for this example, and then see, now this is not a golden strategy, meaning that sometimes the price will break above the market and continue up. See, like here, price went up, and but I'll explain that in a later topic. Okay, I want you to focus on the order blocks. Okay, now that's how we mark the bearish order blocks. As you've seen, is the last bullish move before the bearish impulse. Same thing here, same thing here, and same thing here. Okay, now let's go to the bullish impulse. Now let's talk about the bullish order block. So the bullish order block is just the opposite of the bearish order block. Okay, on my these labels you'll see the 4H or B. Okay, it means the 4H order block. Okay, now on the bullish order block, it's always the bearish move before the bullish impulse. Okay, opposite to the bearish order block. Same thing, price comes here, banks put a lot of money here, price goes up, they start taking out the trades, and it goes down, and then they place a lot of money here and it goes up. Same thing, same explanation. Okay, now that's it for the bullish order block. Now let's go to the examples, and then you can see what I mean. Now I'll explain why this is the order block in a minute. Okay, or on the next topic, because I want to focus individually on the parts of the ICT so that I can teach you as much information as possible. Okay, now, okay, here we have examples of bullish order block. So as you can see, price came here, went up, left this bearish candle, and then the bullish impulse. Okay, you can choose this, you can choose this, but there's a reason I've chosen this. Okay, in which I'll explain, you'll understand as we go on with the strategy. Okay, now as you can see, on the bullish, you can just take the trades like this. And you go for your 1 2 3, doesn't matter. So sometimes the trade will not come back to your order block. Sometimes it will break it. It's not the golden strategy. Okay, you will lose some, you will win some, but look at the risk reward ratio, because that should be your edge, as you can see. Okay, this is where price is at the current time. So this is the bullish order block. Okay, now let's talk about these lines you see here. Now these lines mark the high and low of the structure. Okay, so we can see here the high, 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 high. When we are in an uptrend or an bullish market flow, it's always the highs that are being violated. So when price breaks the high, it gives us the order block. So you can see price broke this high, gave us this order block. Price broke this high with this, gave us this order block. Price broke this high, this order block. Price broke this high and gave us this order block. Price broke this high and gave us this order block. Okay, now that's simply what it is. We call this the break of market structure, or BOS. So for me, I have a template with BOS. Okay, the first break of structure, this one we call it a change of character, because price was going down, now it's going up. Okay, price was going down, it changed the character, now it's going up. So we call it a CHOCH, church, which means change of character. Okay, now let's see a chart where we have the both bullish and bearish order blocks, so we can finish up. I don't want this video to be too long. Okay, so on this chart here, we can see we have both bullish and bearish order blocks. So when price broke this high right here with this price, it formed this order block right here. Okay, which later got violated by price and went down. Now I've marked this order block because it has been violated by here. Okay, the change of character is right here. So price was going up, it broke the low. For the first time it was breaking the highs, but for the first time it broke the low, so it changed character and it is going down. Okay, same thing here. That's why I have this order block right here. So let's say, for example, there's a reason. Okay, you don't just enter this trade blindly, in which you'll understand why in the next topic. So let's say you took a trade right here because of the macro order block instead of the micro, in which it just means this is a higher order block and this is the lower order block. Okay, simple terms, let's say. Okay, so you just take this a trade like this, even though, let's say, for example, your stop loss is above here at 8 pips. Now for this trade, let's say you took this trade blindly and placed a trade like, wait a minute, now, okay, buy. So you took a buy here and lost right here, a sell hit, right? You took another sell here because you're going with the market. You took another sell here, lost. Okay, as you can see, you lost. With this one trade, you've recovered everything and you are still in profit, because you've lost 12 pips here and lost 11 pips here, but you have won 56 pips here. So the risk reward ratio is amazing. That's the edge. Now this buy order block you wouldn't take because price is going down. You will be looking to take this sales order block. Okay, which you had another one here which never got triggered, which happens. Okay, we will increase probability in the next videos. Let's see how this one does. Okay, now see, that's how we mark it and that's how we use them. Okay, so in the next topic we are going to start doing things that increase the probability of an order block, knowing which one is a valid order block and which one is not. And yeah, we go on from there. So if you have any questions, just ask in the comments, and see you on the next topic.